Hey guys, it's Matt Z. We haven't talked to each other in quite some time. I haven't updated a podcast in quite some time, so here's a new one today. Um, Obviously, no excuses for being MIA. Just been really busy, but I thought I'll come back and try to do a few more just to help you out. So today I want to talk about the power of forecasts. I don't want to use words like predictions because it sounds a little bit magical and mystical. So I'm going to talk about, how to be um, a better forecaster or try to be a better forecaster. So why is it relevant so much nowadays? It's the equities market is substantially down. Some stocks, individual single equities are, some of them are down more than 50%, some of them are down 20%. Everybody's trying to call the bottom or try to guess when it's going to happen. Unfortunately, we also had instances of certain digital coins that just imploded. I believe one of them was called Luna. I'll be honest, I never heard about this coin before, but my understanding was that it promised something like 20% per year with no risk, and it was supposed to be stable. And the unfortunate part, it just went to almost zero, and both retail and institutional customers were hurt heavily. Also, kind of to tell you that don't think that institutions always make smart decisions. Don't think that they're always smarter than you. You can also be a good decision maker, and I'm pushing you towards it all the time to become a better and better decision maker. I never underestimate the difficulty of trading, and in our case, in Optimus Futures, we trade futures. It's a very difficult instrument because it's leveraged. So, again, I want you to build a level of confidence as a trader, knowing that people out there don't necessarily, just because they're institutions, might not fall into the same trap of being emotional. And I'm going to discuss it in this podcast, but when they're heavily invested in their past forecasts and even new facts that come to light, they don't want to change it, and it just ends up in being some sort of an implosion, which is really unfortunate for many customers out there. So always be careful, regardless of the asset that you're looking into. Just make sure you're cautious. Let's just keep it at that. Okay, so today I want to talk about forecasts, and I want to read to you a paragraph from a book that's called Think Again by Adam Grant. This is not a book about markets. This is really more of a book about being flexible with your opinions. So I always tend to read those kind of books, when they're of interest to me. So great author, by the way, Adam Grant. But there was a paragraph there that I thought would help and also apply to people in the markets. So as you know, there's a big business of forecasting out there, right? So surveys, who's going to be the next president, the next quarter, how it's going to look like. And everybody's trying to kind of forecast that. And there's better forecasters than others. And I want to look into the characteristics of those people who are better forecasters and how do they do that. So this paragraph really grabbed my attention. So I'm going to read it. The single most important driver of forecaster success was how often they updated their beliefs. The best forecasters went through more rethinking cycles. They had the confident humility to doubt their judgments and the curiosity to discover new information that led them to revise their predictions, right? So it's very interesting that forecasters, one of the better forecasters out there, are flexible people, and they're looking at new facts, right, that are coming to light. So they have an opinion, They think they think of something that some sort of a premise. So since we're in the business of markets, let's say you build some sort of a market premise, right? You build some sort of a forecast, and you think the markets will go up and down, right? But then it's very important to look at new facts that are coming in and not ignore them. Because what happens over time, as I mentioned before, most people are heavily invested in their past forecasts. And this is something that the author mentions as well in later pages. So people have this stubbornness about being right. And in the market, the stubbornness could potentially cost you a lot of money, regardless of the asset that you trade in. So you always have to be flexible and understand new information that is coming in. Now, it does not mean, okay, that you have to have huge new facts, meaning that this has to be manageable. And you just may need a few more facts that may change your opinion. So what you want to do is basically, when it comes to the markets, again, consider all the new facts that are coming your way. Since we're in the business of futures trading and we have, charts that we're looking at, if, for example, a certain support level has been broken and you didn't think it would be, right? So you had a premise and you say, this will be a support, and it's broken. Now you're facing a new fact. It's not a huge fact, it's a small fact, but as I mentioned, it has to be manageable, and manageable means that you have to take small things into consideration. And now you're going to apply and say, okay, what am I going to do now? I have a new fact right now. Am I going to be stubborn? And I think the market is going up, or I think this is just a 2-minute anomaly. That's up to you. I can't tell you those things. But essentially, it's very important to define also ahead of time what potential things may change your mind if you encounter. You might not be able to guess it all the time. Most of the time, people can't guess what will change their opinion. But there could be new facts out there that you say, you know what? Maybe I should consider that, right? And that flexibility, in my personal opinion, will give you strength as a forecaster. Now, again, I have to be very, very cautious when I use that. Nobody can predict the markets, right? So I don't want to use the word predictions. What we're working here is probability. So a forecast or anything of that sort, or a premise that you develop, it's just a probability that something could potentially happen. But here's what happens many times. So people develop, let's say, a theory that the market will keep on going down. They say, okay, now it's going to keep on crashing. The market is down, 20%, let's say on the indices, it will go to 25 and could go to 30 and so forth. Now, some people could be right if they have the right facts. But at the same time, imagine that the market starts turning around. And now you're just ignoring it and you keep shorting the markets, right? And in futures, obviously you have leverage, so that impacts your equity really fast. So think about those kind of scenarios. This is why it's very important to consider new facts and say, okay, I have a new fact right now. The market is actually, let's say it recovered 50%. Does it mean that the market will go up? Again, I'm not telling you yes or no. That's your decision. But consider within the way you think, within your theory, within your method or methodology, is that a game changer? So any small thing that might be a game changer, what you want to do is be very flexible and say, okay, this is a new fact that I have to take into consideration. I'm going to make this podcast really short because there's not a lot to expand on it. I mean, I'm not a psychologist or a psychiatrist, but doing this podcast, or before doing this podcast, I thought that one of the questions that you may have is, how do you apply it, in your day-to-day life? So it's very hard to when as a day trader in futures, and I know most people today are turning into day traders, in my personal opinion at least. I know some people are swing traders, but I believe majority of people, especially with the advent of the micros, are becoming day traders. How do you manage all that? How do you integrate it into your trading? So again, you got to have the big premise of, before you trade, which market direction you think it's overall going, and then You have to let the trades work out. Meaning that when you're in a trade, which is a very short time span at times, some of you are in the market for 3 minutes or 5 minutes or 10 minutes, that's where you have to be a little bit flexible and filter out new information that's coming in, right? You don't want to think that you have to change your opinion now every 30 seconds, turn long to short, short, long. That just racks up transactions and commissions, and you don't want that. What you want to do is have a very strong conviction in the trade that you are going into. So let me give you an example how to put it all together. So let's say your name is John, your last name is Smith, and you say, okay, I think the market, I'm going to trade it more on the short side. I think the market is falling, and I'm going to trade it more today on the short side. That's your overall big premise, right? And now you're starting to short it, and the market starts rallying and breaking up levels. Now you have new information, right? Now you're saying, okay, this is just a swing up in a down market, or something has changed. Again, I can't tell you that, but that's what you have to consider. And that way of thinking, of being flexible with new information that's coming in, would allow you also to put different type of positions. And again, not be heavily invested in past forecasts where you keep on shorting and the market's going up. You keep shorting again and again and again because you've done it so many times that you just want to prove that you're right, and you won't be, and you'll run out of capital. So all those things that I'm saying here, I know that they're hard to implement. It's very easy here to say all those things, do a podcast and tell you to be disciplined. But nevertheless, I felt that it's really important to say that, receiving new information and being open about them, meaning having an open mind about them, it's something that every trader needs. One of the things that Adam Grant mentioned in this book, he said that those forecasters that are doing well, it's not a matter of intelligence or ambition or grit. It's just their flexibility to receive new information. Now, again, I'm not an expert in psychology. I wish I could tell you when to integrate new information and when not to integrate. But the fact that you start thinking how to filter out new information and integrate it into your trading, that already puts you in the right direction. And every single one of you will integrate it in the way that fits their personality. Okay? So having said that, I wish you an awesome week in trading. Remember, there's a substantial risk of loss in futures trading. Past performance is not indicative of future results. I'd love to, as I always say, to earn your business at Optimus Futures. If you need a platform, if you just want to switch from somebody else, if you're not getting the right service, I'd love to accommodate you. So come to our site, www.optimusfutures.com, or if you're in North America, call us toll free. It's 800-771-6748, or locally, you can call us at 561-367-8686. Wishing you nothing but the best, and good luck in your trades. Bye-bye.